experts at the cash budget, but bless your heart for hanging out with me for one more video. We'll keep this short and sweet. Let's do our cash budget for June together. Okay, we are going to start off with our budgeted sales dollars, which we get from our sales budget. And for June, that's going to be $250,000. We know that we expect to collect 30% of June sales in the current month as cash sales. So we are going to multiply 250,000 times 0.3. All right, we also expect that we are going to collect 70% of last month's sales, right? When we sold them, we debited AR. Now we're getting paid this month. So we're going to multiply last month's, May's, sales dollars times 70%, or 0.7. And our total cash receipts are then going to be $241,250 for June. All right, our beginning cash for June is our ending cash for May. And we're going to add our June cash receipts. Okay. Our direct materials, remember we buy our direct materials on account. So when we bought them, we debited materials and we credited AP. Then we pay that accounts payable off the following month, which means that our cash disbursement, our cash payment related to direct materials is going to be for the amount of direct materials we bought last month in May. So I'm going to go to my direct materials budget. We bought $64,452.50 in May, and that's what we're going to pay in cash this month. Our direct labor is going to be the direct labor we incurred in June, which is $39,000. Our variable overhead is the variable overhead we incurred in June, which is $9,630. Our fixed overhead is still just depreciation, which is a non-cash expense, so that will be $0. Okay, our sales commissions, we're going to get those from our selling expense budget, and for June, it's $30,000. Our sales salaries is again from our selling expense budget, and that's going to be $4,000. Our G&A salaries is from our G&A budget, general administration, and that's $8,000 for June. Our interest on our long-term notes receivable is also from our G&A budget, and that's going to be $1,800. Our interest on our short-term notes payable will be $0 because we do not have outstanding short-term note payable. We had one at the beginning or at the end of March. We paid it off in April, and since then we have not had to borrow any additional funds, so that is $0. Dividends are $0 because if you remember, we only paid out one dividend, and we did that in May. But we are going to make an equipment purchase of $55,000. So we're going to add down here $55,000. All right. So our total cash payments for the month are $211,612.50. All right. So our preliminary cash is going to be our beginning cash of $142,342 plus our cash receipts of $241,250 minus our cash payments of $211,612.50. That's going to give us a preliminary cash balance of $171,979.50. That is well over our minimum balance of $50,000, so we do not need to borrow any money, which is cool. And so we're just going to go ahead and add that up. Our ending cash balance at the end of June is $171,979.50. Okay, so now we know, okay, if we, with our current budget, our sales budget, our production budget, all of our budgets, we're going to be okay on cash. We're actually going to be making some money. We may decide to do something with that. We may not. And now we know that. We also have our ending cash balance, which we will need when we do our budgeted balance sheet. But for now, we're going to wrap up the cash budget. In the next video, we will talk about the budgeted income statement. I will see you then.